All right, hey everyone. Welcome to our webinar. Just give me a sec. Let me just turn everything on. Hi. Hey George. Hey Harena. Hey Jacob. Hey Kaylee. Hey Lily. Hi Gunjan. Hi Lorenzo. Hi Rich. Hey. Hey. Sorry, I'm slightly late. I was trying to get the slides to work. It's good that I noticed the slides weren't working. Okay, let me adjust the mic. Can you guys hear me better now? I had someone saying that couldn't really hear me. Is this better? I brought the mic closer to me. Is that better? Can you guys let me know in the chat box? Okay, that's great. Thanks, Helena. Oh, yes, Josh. I fell down. That's why my lip is damaged. Fell down and hit my face. I noticed the AUD USD reversal worked well from last week's webinar. Oh, I'm glad. I hope you caught it. I didn't AUD USD. I was in another trade, so I didn't take that trade myself, but I hope you guys caught that. I hope you guys caught that. Okay, I do still see more people joining the webinar, so let's just give them a minute or two to like settle in and get seated. I always ask you guys where you guys are from, but I'm assuming most of you are from London because every time I do ask and you guys always say you guys are from London. So is everyone from London? Okay, we've got an Australian here. One German, but mostly from London or near London. Okay. All right. Okay. I think that's everyone for today. Okay. So let's start with this disclaimer. Oh, Italy. Hey, Lorenzo. Welcome to our webinar. Okay. As usual, let's start with the disclaimer. You guys already know how this rolls. Anything that I present today is not necessarily of those of Vantage FX's view. It's more like how I got profitable in trading, and this is I'm just sharing my technique. Vantage FX does not guarantee the accuracy and reliability of any information provided herein. So that being said, even the disclaimers, whatever calls I make or whatever setups I do in my webinars, you guys should take it only if you agree with my analysis, only if it's in agreement with your own strategy and whatnot. Okay, so don't try to force it. When it comes to topical though, it is accurate. These disclaimers are mostly for when we're doing setup. So today we're going to be doing topical. We're going to continue with our part 4 series of the Fibonacci series, part 4 of our Fibonacci series. This is the last part. And next week we're going to do trading psychology. Okay, so again, risk warning, trading margin, trading FX and CFDs, especially on margin, carries significant risks and is not suitable for all investors. So please, please, please do be cautious if you guys are trading, especially on margin. Okay, please do not jump into a pool. Do not jump in an ocean if you don't know how to swim. Okay, only please just be safe, guys. Okay, so the topic for today is Fibonacci projection. That is part 4. I know it writes here understanding Fibonacci confluences, because once we're done with the projection, we can then move on to confluences, which is today. So we're gonna start our agenda. Our agenda for today would be to meet the team. We're gonna do a recap of the Fibonacci series, which is retracement, extension, expansion, and projections, which we will be doing today. And then we're going to move on with Fibonacci confluences. So Fibonacci confluences is basically a combination of all 4. So we've already learned all 4 of this. So we're just going to combine all of it into a Fibonacci confluence so that we can find our most probable setup, our most probable entry, and our most probable exits. But it's mostly for entries, not so much for exits. After we're done understanding the concepts of Fibonacci projection, and then we're going to do a recap of all of that, we're going to move on to the live charts as usual to look for our setup, well, not so much look for our setup, but more to apply what we have learned so that you guys can implement it into your own trading style if you see fit. Okay, so we are Everest Fortune Group. We're an award-winning research team. We're the finalists for Technical Analyst 2019, 2022, and 2021. I always say I'm going to update the slides. I never do, but yeah, it is 2021. For the best Forex and best equity research, we are certified Singapore fintech company. So yes, we are based in Singapore. We do appearances on radio, on TV, talk shows. We do a lot of financial talks. We give our research, our talks, and we even conduct these webinars for brokerages. Like right now, we're doing it for Vantage Markets. Okay, so if you guys have any question anytime throughout this webinar, don't be shy. You can ask. I do see very familiar names here, but I like Rich, Philip, Lorenzo, Lily, Kaylee, Jacob, Helena, George even. But the rest of you, your names are not that familiar to me. So if you guys have any question, do just shoot at any time. I will try my best to answer. Okay, so the team consists of Desmond Leong, which is our CEO. He basically taught us everything we know about trading. Just give me a sec. Yep. I've got my colleague here, Angelina. She studied in Nottingham. Actually, I studied in Nottingham as well. She's a really good trader. But she only takes you guys on Monday. So I take Tuesdays and Thursdays, and she takes Mondays. So Mondays we do our news market update. You guys would have met her yesterday if you guys joined. And I take Tuesdays and Thursdays. Okay. For those who don't already know me, I do see a lot of familiar names, but for those who are new here, my name is Cassandra. You guys can call me Cass, just for short. I'm an investment analyst here at Everest Fortune Group. I'm a profitable trader. I'm managing close to $1 million now. So this is while passing FTMO twice on the side. So I manage like close to $1 million on my own personal account. On top of that, I've passed FTMO twice. FTMO is a prop trading test that requires you to be 10% in profit every month. Okay, you need to end the month in 10% profits for you to be able to pass this test, and I've done that twice, and I've done my Forex fund twice as well. So I've basically passed these tests like 4 times already. So I guess I am okay in trading. I would say that would be evidence that I should be okay in my own trading, and hopefully I'll be able to share how I am able to be profitable in trading and help you guys be profitable in trading as well. Okay, so my specialty is catching reversals. I do that by using Fibonacci confluences, which is what we're covering today. I think this is a very important topic actually. I also use it by, it's a combination of supply and demand and Fibonacci confluences. Supply and demand is basically just support and resistance. Okay, I also look at the overall market trend when I do that. So that's that. Okay, let's start with a recap. I know I see a lot of familiar names, so as we go along, I would like to see those who have been attending our series to throw in your answers as well, because when you participate in answering these questions, it also helps you refresh your memory and help you strengthen your knowledge in this subject. Okay, so can you guys see the video or the GIF that is moving, that's playing? Can you guys let me know in the chat box what kind of Fibonacci is this? For those who know, please type in the chat box what kind of Fibonacci do you think this is? All right, we've got answers coming in and they're all the correct answers. So, oh, hello, Rudy. Okay, Harina, Rich, Rody, Kaylee, Jacob, I knew you guys would be giving the correct answers. Nope, Lily, it's a retracement, because remember we were saying a retracement looks like a V, but the back end has to be shorter than the starting end. Okay, why? Because this is where the 100% is, and this is where the 0 is. The second part of a retracement is always between 0 to 100. So You see how this is between a 0 and 100? When it pulled back, when it retraced, it was between the 0, which is up here. You can see the 0 right here and the 100 right there and the 0 at the bottom. Okay, so that's how we know it's a Fibonacci retracement. I'm going to quickly run through this. Fibonacci retracement has how many levels? Can you guys let me know in the chat box? How many key levels do we look at for the Fibonacci retracement? Thank you, Helena. Thank you, Rodi. Thank you, Rich, Jacob. I'm waiting for 2 more people to answer. Yes, thank you, Lily and Kaylee. Okay, so it's 5 levels. I'll let you pass this time, Kaylee. I expected you to answer because I see you in the webinars every week. Okay, so yes, it is 5 levels. The 5 levels are in the screen right now. I'm glad the screen is jammed so that we can kind of take a look. So it is the 23.6, the 32. We'll have to leave webinar and catch up online. Oh, okay. Lily has got to go. I guess she will come back after she fixes her internet or something. Okay, there's a 38.2, the 50%, the 61.8%, and the 78.6%. I know, like right here, it says 88% and 76.4 as well, but for how we use the Fibonacci retracement, I don't know how other traders use it. Here at EFG or Average Fortune Group, we use these 5 levels. We focus on these 5 levels. So here at Average Fortune Group, we do a lot of back testing. Our main job is basically research, and we do a lot of back testing, a lot of data research, and we have found that these are the 5 levels that price reacts off most frequently. Okay, so we're not saying that 88 is not valid. We're just saying we only focus on the 5. Okay, and these are the 5 that we feel that is good enough. And if I'm not mistaken, majority of traders only focus on the 5. Okay, so that's the Fibonacci retracement. Let's move on to the next one. Okay, I'm not gonna test you guys. The answer's already up there. I forgot to remove the answers. I wanted to test you guys. This is just a recap, okay, guys? For those who are new here, this is just a recap. We've got a Fibonacci extension. Oh gosh, I forgot to remove all the answers. So basically, I can't test you guys for Fibonacci extension. Fibonacci extension kind of looks like a Nike tick. See, it looks like a Nike tick. It wants to do a Nike tick, and subsequently, after it does a Nike tick, that's when it does the reversal. Okay, so that's the whole purpose of the Fibonacci, is to predict where the price is going to reverse off. Okay, so it looks like a Nike tick. It usually goes up to the 127.2 or the 161.8. So these are the 2 levels that we focus on with the Fibonacci extension, and at either one of those levels, the 127.2 or the 161.8, we expect price to reverse from there. Okay, so that's the Fibonacci extension, that's the Fibonacci retracement. Now let's move on to, can you guys let me know which Fibonacci this is? All right, got answers coming in already, and they are the correct answers. I'm glad you guys were paying attention all the time I was talking. I'm glad you guys were paying attention because I took you guys 1 week even though I had tonsillitis. And I'm glad, like, even though I was in pain and I still took the webinar, you guys were paying attention and it was worth it. Okay, as long as you guys still remember, it means that it was worth it. Okay, so yes, this is the Fibonacci expansion. Thank you, Rich, Jacob, Rody, James, Josh. Thanks for your answers. You are correct. So a Fibonacci expansion basically looks like a zigzag. It looks like kind of like a Harry Potter kind of zigzag. You know how Harry Potter has that like zigzag on his forehead? So it's the same for Fibonacci expansion. I missed this session. Oh, that's okay. We can do a recap now. It looks like a zigzag. What you want to do when you find the zigzag is take this first 2 points of the zigzag. It doesn't matter how you're drawing the zigzag. You can draw it like this, or you can draw it the other way. Let me try to like inverse it. Okay, whichever way you're taking the front 2 points, okay, to plot your levels. We can go on TradingView and practice that later, but like theoretically, this is what you need to know right now. Okay, basically the Fibonacci expansion is just 2 levels. It's just 2 levels. It is the level below 0. Okay, it is below 0%. That means the 2 levels that we focus on for Fibonacci expansion is negative 27.2 and negative 61.8. Okay, there's only 2 levels that we focus on, and they are both the negative levels. Okay, another catch about the Fibonacci expansion is that when it does a retracement, when it does the zigzag, it needs to retrace at least minimally 50% of the original length or the first movement. Okay, this is the first movement. This is the first movement. It needs to come back at least 50% of that movement and continue with that zigzag pattern for it to be a valid Fibonacci expansion. You guys can Google Fibonacci expansion. I can assure you won't find a lot of information on it, because here at Everest Fortune Group, I think we were the one who kind of wrote it down and made the rule clear. Because when I type Fibonacci expansion online, the first few that comes out is the Forex Army. The Forex Army is basically an education platform or place Everest Fortune Group created to write down all the basics of Forex or technical analysis. Okay, so that's that. Today we're going to be focusing on Fibonacci projection. Fibonacci projection, it is the same as the Fibonacci expansion, where you need to find a zigzag pattern. Okay, you need to find some sort of zigzag pattern. It can look like an N, or it can be an inverse N. Okay, for the Fibonacci projection, you'll be taking 3 points to plot it, 1, 2, and 3. Okay, so once you identify that zigzag pattern, you are going to take the first 3 points to plot the levels. We are going to practice that on TradingView shortly, but this is what you need to know now theoretically. Okay, once we plot this, the levels that we will be focusing on for Fibonacci projection is all the levels above, not all the levels, sorry, the levels between 61.8% to 100%. Okay, these are the levels that we focus on. There are other levels above the 100%. These are called over projection. These are projection, but it's just an over projection of where you think price is going. Okay, on an over extension or over projection of where you think price is going. But the levels that we focus on are 61.8. There are 3 levels that we focus on. 61.8, yep, it includes the 78.62. Thank you, Rich. 61.8 is one of those levels. 78.6 is one of these levels, and 100% projection is one of those levels. You guys must be wondering, how can you get 100 when 100 is the starting point, right? Usually 100 is the starting point, but with the Fibonacci projection, you're taking 3 points to plot your level, so the 100 will not be the starting point. And you will see that when we move to TradingView later on. So the over projection, which are the levels above 100%, is also 3 levels. There are also 3 levels. It is 127.2, okay, 161.8, and 200%. We rarely use these levels, but let's say price came and destroyed all of these 3 levels. That's when we use the over projection level. Okay, these are the level where we project. That's a really far level. Okay, we're gonna move on to the live chart so that we can put everything I just said into practice. We can try to identify Fibonacci projections, retracements, extensions, and expansions all in one chart if it is available. Again, sometimes you go to a chart and you cannot find a confluence. That's fine. It means that there's no confluence on that chart. Just move on. But when you do find a confluence, all I can say is it means that that level is very, very significant. Okay. Do you guys have any questions you want to ask before we move on to the live charts, or you guys want to just jump straight to the live charts? You guys can let me know in the chat box. I will leave this here for like a minute or two in case you guys have any burning questions, anything at all regarding trading, anything, my account, anything to do with Forex, trading, anything at all. This is a time to ask before we look at the charts, and I won't have time to like look at the questions. Oh, hey, Yubaraj, welcome back. All right. Nobody has a question. You guys can ask questions, you know, like you don't have to be shy. I don't have to read your name out if you're shy. Anything to do with trading and all, I will try my best to answer you. Trading, okay, don't ask me personal stuff. That has nothing to do with you guys, only trading. Okay, I've got a question. How long have you been trading for? I've been trading for, let me see, how old am I? When did I start? I started when I was like 20, early. Okay, I've probably been trading for about 5 years now, I think. I always think it's 3 years, but when I think carefully, it's been 5 years. I was not profitable the first 2 years because I was taking a lot of dumb trades that didn't make sense, that didn't have basis. What I can tell you, like the best advice I can tell you when it comes to trading, that is that you should look at trading as if it is a very factual game. So everything you do in trading has to be factual. It has to come with reasoning. And it cannot come with like, oh, I'm gonna enter here for a sell, or I'm gonna enter here for a buy or long or short, whatever it is. I'm gonna enter here because I just feel like it. I feel like it's gonna go down. I feel like it's gonna go up. Oh, Russia just attacked Ukraine, so I feel like the economy is gonna crash, and therefore I should short the market. No, trading is a very factual thing. Okay, it's a very factual thing. Anytime you enter the market, it should come with reasoning. You should like have 1,000 reasons like why I'm entering for a short. It's because it's below the Ichimoku. It's because Russia is bombing Ukraine. It's because there is a recession coming. It's because inflation is high. It's because the job employment rates are low. Okay, it's because like anytime you do something in trading, it has to come with a reason. I am new to this webinar. How do you access to the previous Fibonacci trainings? I missed the 3 sessions. Okay, hey Gunjan, if you are new here, if anyone is new here, you guys can just approach Vantage Markets and ask them for the webinars from the last few weeks. Okay, just let them know the speaker and the webinar you want them to retrieve for you. But I mean, if you ask me honestly, if there's a faster way, you can just watch YouTube videos. There are a lot of videos out there that you can watch that will also help, but I don't know if it will be too confusing for you. So if you want to be safe, maybe you can just approach Vantage Markets to give you the videos, because it's like structured, right? So I go like retracement first, then extension, then expansion, and then now projection. So if you were to Google all of that topics, I'm sure if you Google any of those topics, you will be able to find it on Google or like YouTube or wherever it is, but I don't know how structured they are. So if you want to be safe, just ask for those webinars. Okay, I'm gonna move on now. Can you guys see my charts? How do I see the chat box? I cannot find it in this webinar. Oh, okay. You like the chat box to talk to Vantage Markets? Is that the question? I don't think there's a chat box for that, to be honest. I think you need to email them. You need to find their email on their website, and then you can email them and ask for it. Right? I think it should be. Should we go on it together? Sorry, guys. This is just gonna take like a minute. Okay, I'm sure there's a about us somewhere, like contact us. There you go. Right there, support@vantagemarkets.com. You can just drop them an email and ask for it. Oh wait, actually there is a live chat. Sorry, I haven't really toggled with these websites because I'm only here for the webinars. I'm mainly here to give you guys these webinars. Okay, you guys can see my charts. Before I move on, do you guys have any specific pair you want to look at? Anyone in any trade that you want some confirmation? Like you're already in a trade and you just need some confirmation. If you do, drop it in the chat box right now. If not, I'm just gonna pick some random pair. Just any random pair I see. Okay, Harena is in EURUSD. I've got some requests coming in already. Okay, since Harena is already in this, or I don't know if you are in this or you just want to analyze this together. I do see a lot of Fibonacci here, different types of Fibonacci here. So this would be a good chart to practice on. Okay, one look, can you guys let me know what Fibonacci's you guys see? What are the kinds of Fibonacci you have trained your eyes to be able to spot? Okay, retracement, that's right. There's a retracement here. There's an even smaller retracement here, depending on how this plays out. There's an even smaller retracement here. Okay, this one is more relevant, okay, because it's closer to where current price is. Okay, there is an expansion. Okay, you're right, there is an expansion. See, there's an expansion, there's a retracement, and there would also be a projection, which we learned today, because most of the time when you find a projection, you will be able to find an extension because it's both identifying the same kind of patterns. Okay, I have to correct you guys there. This is not an expansion, actually. I don't know why my mouse is doing this. I did not draw this so long. Okay, my mouse is just acting really funny right now. Okay, why this is not an expansion? Because the rule of the expansion is it must minimally retrace back to 50%. Sorry, maybe I didn't highlight that just now in the recap, but it cannot cross the 100%. Okay, so you see for this example, you see how for the example, this has crossed the 100%. So it would not make it a valid expansion. Okay, it needs to be somewhere around here and then do the reversal. Okay, it cannot pass the 100%, which in this case it has. So that's okay. We can just plot the Fibonacci retracement and the Fibonacci projection here. That's two confluences, which is good. The best is if it's 3 and above. When it's 3 and above, I would really take note of that entry. When it's 2, it's like, meh, you know, like I wish there were more. But if it's 2, that's fine too. Okay, let's first plot our Fibonacci retracement. From the swing low, we are gonna pull to the swing high. Okay, we're gonna go into the settings, get rid of everything, and we're gonna only click on the 5 settings, the 5 levels that are relevant to Fibonacci retracement. If something is not relevant to Fibonacci retracement, we don't use it, okay, because it's not relevant. Okay, so from these charts, can you guys let me know which level is most relevant to where current price is right now? Which are the levels that we should be keeping? Level or levels? I'm not going to give you guys the answers. Which are the level or levels that we should be keeping? And which are the ones that we should be getting rid of? So which level do you guys think is most relevant to current price? All right, we've got answers coming in and they are all correct. Correct. You're right. Okay, it is the 61.8 and the 78.6. Why is it 78.6 and 61.8? Because price has broke through all of these 3 levels and therefore it's not relevant anymore. Like you can't use these levels anymore if price don't respect those levels, right? We only use levels that price respect. It clearly does not respect the first 3 levels. I see a lot of you answering 78.6. I would say 61.8 is still kind of relevant. Why I would say it's kind of relevant, because I do still see a lot of like rejection going on here. So it may be a possibility that price is just coming here and then shooting up. It's a possibility. I don't know yet for sure. But right now it looks like it doesn't look like a very strong breakout. You know what I mean? If it's a very strong breakout, you will see like a super strong green candle here and then followed by super strong green, sorry, not green, red candle. But right now it kind of looks like it broke out, but it kind of wants to go back above it. So we'll still keep the 61.8 just to, like, you know, KIV, like keep in view. We'll just keep this in view. Okay. Let's see if there anything that lines up with that. So now we're gonna plot our Fibonacci projection, right? This is the Fibonacci projection. For the Fibonacci projection, you go into the gun and Fibonacci tools. It is not the first one, okay, guys? Every time we plot 2 points, we use the first one. We use the Fib retracement tool, okay? But for the Fibonacci projection, it is 3 points. So when it's 3 points, we use the trend-based Fib extension. This is the tool that we use. Click on it. We're gonna go to the swing high of the first point, the swing high, to the swing low, and back to the swing high, okay? Okay. Do you see how it's green? Blue, it's different colors so that we know which levels are for which. So green is for Fibonacci retracement, blue is for Fibonacci projection. If we manage to identify all 4, you're gonna see 4 different colors on the charts, okay? So Fibonacci projection, we're gonna get rid of the levels that are not relevant to us. Fibonacci projection, I'm just gonna test you guys real quick to see if you guys were paying attention early on. What are the levels? Sorry, how many levels do we focus on for Fibonacci projection? All right, all right. Thank you, thank you, thank you. Okay, a lot of correct answers coming in. Okay, it's actually 3. I see some of you answering 2. Maybe I wasn't clear earlier on, but it's actually 3 levels. Okay, the first level is 61.8, followed by 78.6, and I see a lot of you answering 3 and the correct levels too. So I'm not sure. Maybe there was some confusion early on, and 100%. Okay, so these are the 3 levels that we focus on. One thing that I noticed straight off, that none of these 3 levels lines up closely to the Fibonacci retracement. So I'll show you guys what a confluence is. A confluence is when, let's pretend the candle didn't end here. Let's pretend it ended somewhere lower. Okay, I'm gonna move this a little down. Let's pretend that the candle, this is as high as the candle goes, okay? Okay, do you see how those levels lines up nicely with Fibonacci retracement? This is called a confluence. A confluence is when a lot of different types of Fibonacci lines up in the, well, it doesn't have to be the exact same area, but in the same area. So when I put it back to where it was here, it kind of looks, there's kind of like a big gap. It makes me feel like this is not a very confluent area, right? A more confluent area is everything lines up nicely. Okay, we're supposed to line it up with the end of the wick. Okay, so it's the highest point that you see. It is the highest point. Okay, so I'm gonna say EUR/USD was not the best practicing point because we couldn't find a confluence. So let's I'm not gonna look for any setups today, okay, guys, because ultimately I want to practice on being able to find confluences first, because today's topical setups are for Thursday's live charts. Okay, I mean, unless we manage to find a confluence, then that'll be great. Okay, so let's go look for a chart where we are able to find all 4 confluences. Okay, this might take a while to we have to just slowly run through the charts to see if there are any confluences at all. Okay, one look, I see a Fibonacci expansion. This could also be a Fibonacci projection. Okay, is this a Fibonacci retracement? Yep, it could be. Okay, we can practice these 3 here. So let's spot the Fibonacci expansion first. Fibonacci expansion are the two levels below 0. Okay, so it's the negative 27.2. This is not a good example either. Okay, let's go look for a different example. It's really hard to find an example because it's really hard to find confluences, but I can assure you, once you find a confluence, it means that you have hit the jackpot because you have found yourself a really good trade. You have found yourself a really good entry to some trade. Okay, EUR USD is not working out when it comes to the confluences. Okay, this might be a good one. Okay, actually this potentially is a very good one. Okay, one look, I do see all the confluences, to be honest. I do see all the confluences here. Okay, I'm gonna just quickly run it. I see a Fibonacci retracement extension here. Do you guys see it? It's a Nike tick. It can be inverse as well. As long as the second part of this drawing, I don't know what should I call it, a V. The second part of this V is longer than the first part. It is called an extension. Okay, so there is an extension right here. Okay, there is a retracement right here. Do you guys see that? You guys see the retracement? 61.8 retracement and 78.6 projection is not close. It's not, I mean, it's kind of like a zone, but it could be closer. It could be closer. Sorry, I didn't see your question earlier on. Do you line up with the end of the wick? Okay, I already answered that one. Okay, yeah, so it would be better if it's closer. I mean, I could have used that example, but I didn't want you guys to think that was the standard of confluence that we look for. The standard of confluence that we look for is really like the ones that I have really caught. One of the best trades that I've caught was gold. I saw in confluence, it was like literally 4 levels just lining up on one line. It's just 4 levels lining on one area, man. It wasn't even like a gap. It was just like this. And like immediately I know that was gonna be a strong resistance because we use Fibonacci to back up our strength of a resistance, right? When we find support and resistance, we use Fibonacci to back it up to see how strong it is. So the more Fibonacci lining up at the same area, it just means that it's a very strong level that price is most likely going to reverse to. Okay, I also see the X projection here. Sorry, that was too long. I also see the projection here. So yeah, let's try to work on these first. It's very hard to find confluences, I have to say, but when you find it, you would have found yourself a really good trade that would have made you a lot of money. Okay, so let's start with the projection. Based on the projection, this is where we're gonna project price to go. Okay, this was the projection. Okay, guys, this, and this. Right, we're always taking the first 3 points, 1, 2, and 3, which I did. I took the first 3 points, and then now we can also reuse this zigzag to find the expansion. Okay, the expansion is 2 points from the swing high. We're going to pull to the swing low, the lowest point you can see and the highest point you can see. We're going to grab the 2 negative levels. We're going to change the color of it so that we know the difference. It's not lining up. Nothing is lining up. That's totally fine if it doesn't line up. Okay, now we're gonna plot the retracement. We're gonna plot the retracement from the swing low to the swing high. We're gonna select our 5 retracement levels to see if any of those 5 lines up with the other Fibonacci. Okay, just one look, I do see the 61.8 lining up really closely. I'm going to change this to green, some other color. Okay, I've changed it to, no, you know what, that's too much. Okay, black. Okay, so black is Fibonacci retracement, blue is Fibonacci projection, and green is Fibonacci expansion. Hey Lily, I have not gone to GBP JPY. We can go through that shortly. Right now, we're just trying to put Fibonacci confluence into practice so that you guys will be able to identify it with or without me. You guys can try to identify it yourself. Okay, let's get rid of everything else that's not relevant. I'm just gonna leave the 61.8 and the 78.6. Okay, so do you see how the 61.8 Fibonacci projection and the 61.8 Fibonacci retracement lines up very close to each other? This is the closeness that I would prefer. The one that we saw earlier on was the gap was a little too much, so it made me feel like that zone was too much. Okay, so it makes me feel like that wasn't gonna be a very strong zone. For projection, where do the two swing high have to be? Are they supposed to be at the same level, or nope, it doesn't have to be at the same level. For projection, you first need to identify your zigzag pattern. First, identify the zigzag pattern, and then you're going to take the first 3 points of that zigzag pattern. Okay, so in this current example, right, the zigzag pattern would have been here. Sorry, this is not the correct one. It would have been here. Okay, this is a zigzag pattern. Do you see the zigzag pattern? And you're going to take this swing high, this swing low, and this swing high to project these 3 blue levels. Okay, that's how you use the Fibonacci projection. Would this suggest that price will make its way down to the confluence and bound? Okay, yes, Kaylee, that's exactly what we're trying to do with the confluence. What we're trying to do when we find confluence is it means that it's not a sure thing, but it means that your probability of price coming to this area and bouncing is high. Okay, but then again, we need to back it up with other things as well. We need to see if there's a support and resistance there. We need to see if there's a descending trend line there. That we need to see other things as well. But this is just one part of identifying support and resistance. Okay, expansion. Is it the tool for Fib retracement within only the 2 negative? Yep. Harena, it is only the 2 negative levels. So the expansion is negative 27.2 and negative 61.8. So long there's a zigzag. For projection, yes. So long as there's as long as there's a zigzag, you can use it as a projection. But remember, for the expansion, the zigzag is only valid if this third point here does not cross this first point. Okay, the third point cannot cross the first point. An example of that is actually on the charts right now. Let me just get rid of this. Okay, guys, I guess today we won't be looking for setups because we need to focus on being able to identify all this fib. Okay, an example would be here. Okay, let's pretend that this hasn't happened yet. Okay, you see how this is a zigzag as well, but this, I overdrew it, sorry. This third part here has actually surpassed this level. So if we take like a horizontal ray, you can see how it kind of crossed this level. So it is not valid for an expansion, okay, but it is still valid for a projection. Okay, I hope this is not too confusing for you guys. So basically with the Fibonacci, your main job right now, the main thing you should focus on is being able to identify the patterns first. Like, trust me, 10 people can look at this same chart, and I can assure you, some people will see a Fibonacci retracement and some people won't. Some people will see the Fibonacci projection and some people won't. What you want to do is train your eyes to be able to spot all 4 of it, if it's on the charts. Okay. So right now, the one that I do spot is the Fibonacci retracement and the Fibonacci projection. Sorry, I don't know why I keep drawing up. Fibonacci expansion and the Fibonacci projection. Okay, I don't see a Fibonacci. I don't see a Fibonacci extension unless we consider this tiny little thing here. We can try to see if that tiny little thing is relevant at all. Okay, let's get rid of that, and then we're gonna get 161. 161 is as far as the Fibonacci extension go, and as you can see, 161 is really far from the rest, so it's not going to be relevant. The Fibonacci expansion is really far from the rest as well. It's not going to be relevant. The one good example that I would say is when all four lines up in the exact same area, and you just know that there's gonna be a very high chance that price is gonna go there and then reverse back when it goes to one of those very strong areas. Okay, so is everyone okay for now? Is anyone still confused? Because I do see a lot of questions. If you do, this is the time to ask. This is like not the best example still. Okay, so once I find my Fibonacci confluence area, okay, there's only 2 confluences. Okay, the best is 3 and above. Do I choose the same icons to draw retracement and extension or expansion? Extension you use, so retracement, extension, and expansion, the first 3. Okay, the REE, retracement, extension, and expansion, you use this tool, Fib retracement, because this is a tool that allows you to take 2 points. Okay, it takes 2 points. If you're using Fibonacci projection, okay, the one that projects where it will go between 61 to 100%, you use this one, trend-based Fib tools. This one allows you to do 3 points. Okay. Hey Amina, welcome. Okay, so if anyone of you need me to repeat that again, let me know. Okay, in the meantime, I'm just gonna go back to this confluence level. I'm gonna get rid of the 78.6 because it's too far from where price is. Okay, the next level. Okay, now that we found the confluent area, I'm good, thanks, how are you? I hope you're good too. Recovering, I fell down on my face. Okay, so we're gonna try to identify support and resistance that lines up with this confluent area. Okay, the more things that lines up in the same area, it just makes that area very strong. And the stronger the area is, the easier it is for you to identify reversals, which is my specialty. My specialty is finding those reversals. I'm sorry, I don't know what's wrong with my mouse. Reversals, okay? And that's where I usually get in here for the buy. I'm not talking about right now because right now we need to back it up with other things. Okay. Fib on HDF is solid, and Fib on which one should we take note? Fib on, sorry, what sorry Harina, what's HTF and what's STF? I'm trying to figure out what's that short. High time frame. Okay. Okay, yes. Harina, what I can tell you is when I just started trading, I knew traders were plotting the Fib levels using Fibonacci confluence on the small time frame, like 3 minutes and the 5 minutes, and they were making a lot of money. So my point is that it works on all time frames. For Fibonacci confluence, it works on all time frames. You can get in for any, like if you're a swing trader, you're a scalper, you're like, I don't know how long you hold a trade for. As long as you're using Fibonacci confluence, a lot of the time it is valid on all time frames. Would drawing 3 retracement from different price level be a valid confluence? Yes, George, that is a very good question, and that's a very advanced question to ask. That's you can. If you find, okay, let's see, George is asking if you draw 3 retracement from 3 levels, is it still valid? Okay. For this one, I only see 1 retracement. Okay. There may be some different chart patterns where this is a retracement, then there's a smaller retracement, and then there's an even smaller retracement somewhere there. Okay, and then you can combine all of those levels. If all those levels lines up somewhere, it just so happens to line up somewhere, then it is valid as well. Okay, so basically as many Fibonacci levels lining up in the same area just makes it a confluence. Okay, so once I found my confluence, usually I try to see if there's any support and resistance level that lines up closely. I do see a swing low here. Okay, I do see a swing low here in this area. That's the only thing I see. I see like a tiny little swing high here. Could be irrelevant, but then again, we are on the weekly charts. Remember, we are on the weekly charts. Let me make this bigger. Sorry, it was so tiny earlier on. Someone should have said something. Okay, I didn't realize it was so tiny for you guys. Okay, so if we pull this zone back, it would line up. It would line up with. It would line up with this tiny little swing low. It will line up with this tiny little swing high. It will line up with these swing highs. Okay, so you can see even in the past, a lot of time price came here, there was some kind of reaction happening. Okay, it means that this is in fact a key level. It is a significant level that you should take note of. But looking from how it react, it came here, did a reversal, in the end it still broke through anyway. You see that it broke through. It just means that if I am priced and I came here, I'm just gonna pretend I'm priced right now and I came here, I'm just like, oh, okay, there's gonna be some resistance at the bottom. Am I able to break through? Do I have to reverse? I don't know. I don't know yet, but looking from past, again, as a trader, you need to remember that price trading is just, the charts is just a history, it's just a repetition of history. It's just history repeating itself over and over and over again. So if price came here in the past and it respected this area one time, two times, oh, I don't know how I managed to do that highlighter, three times, it came here and respected it three times. That means that when it comes here again for the fourth time, is it going to respect or is it going to break down? That's entirely up to you to decide. When I see that it respected more times, then I'll be very confident. Right now, I just feel like, it's kind of respecting, not really, kind of broke through too. So if it comes here, am I going to enter here for a long? No, I'm not going to, because I only want to enter if when I look back at past, when I scroll back to history, I see price respecting this area a lot of time. I see respecting this area a lot of times. That's when I enter here for a sell. But right now, I've already found this confluence area. But when I try to like back it up with historical data isn't saying much. It's just saying like, yeah, price kinda respects this area, but not really. It doesn't give me confidence. So when it doesn't give me confidence, I don't enter the trade, right? Right now, I hope I can find a very good example, but honestly, if you can find a good example, we would all enter that trade and we would all be making a lot of money. Okay, let me try see if I can. This might be one of it. Okay, I need to do this fast because this webinar is gonna automatically turn off in 6 minutes. Okay, quickly now, I see a extension. Okay, it just broke this 100% level, making it an extension. Before it broke, it would have just been a retracement. I see an extension. I see a projection. Is this a expansion? Nope, I won't consider this expansion because it kind of did an M. Okay, so right now that's also just 2 levels. You want to find a chart where there's more than 2 levels. You want to find one with 3. If you're able to find one, if we're able to find one with 3, we could all possibly make some money today. Okay. Okay. Projection, extension, kind of bigger extension happening there. Projection. Okay. Let's see if we can find something. We want to try to find something today. Okay, I see a projection here. That should be the 100%. Okay, it's at the 100% right now. Okay, I see a extension here. Extension is not valid anymore. This extension is not valid anymore. Let's see if this later one is valid. Still valid, but nowhere close to the. Let's see if then as an overextension. Nope. possible expansion. Sorry, I took the wrong tool. Negative. Okay, there might be something coming up, to be honest. Okay, let's see. Not the best. Not the best, not the best, but let's see if anything lines up here. Okay. I see 3 levels lining up in the same area. I would much prefer it if this blue one, this Fibonacci projection was lower, but it's not. It's kind of far. So we're not gonna use this. Okay, we want something that is so much tighter, something like this. Okay, when it's something like that, you can draw a zone. That means you now have a bias that price is gonna come here and then reverse off this zone. Okay, but for this example, the Fibonacci projection is kind of a little too far from these 2 levels. You want it really tight and close to each other, and that makes that area very relevant. I don't think I'll be able to find an example today. Honestly, I only have 2 more minutes. Let's try another charts. Sorry, what was the charts that Lily was requesting? GBP, JPY. GBP, JPY. Okay, I see a extension, projection. Let's see if anything lines up. Sorry, I took the wrong points. Nope, not even valid anymore. It looks like it's doing a Fibonacci extension though. Okay, guys, I just want to remind you guys that one level of Fibonacci extension alone, one Fib level alone is sometimes relevant or good enough to find reversals already. But for the purpose of our topic for today, which is Fibonacci confluence, it is much, much better if you find a confluence. Confluences are just so strong. I can assure you, if you can find 10 confluences, 9 is going to make you money. 9 is going to make you money. Can I draw different Fib patterns on different times all in one? For example, I draw on the 4 hours and another on the 5. You actually can do that, Harena. That's a good way. You can actually draw on different time frames, and then because when you move to small time frame, those levels would still be there, right? And you can still use those levels. It's just that it's really hard to find that way, but if you want to, you can as well. Most of the time, the Fibonacci confluence does happen on one time frame. You don't even need it to like go. You don't need to go in different time frames. If you can find it on one time frame alone, that's already good enough to find you that like powerful magic trades. So yeah, okay, guys, I've run out of time. This is probably gonna cut off in a minute. I'm just gonna quickly say this. We weren't able to find an example today because confluences, especially when it's all 4, doesn't happen all the time. 3 is already rare. All 4 is even harder. So what you guys can do, you can go home and practice. Just train your eyes to be able to spot those patterns and see if maybe you might be able to find a confluence. If you able to find a confluence, I just want to let you guys know that out of 10 times, I dare to say this, that if you find a confluence, especially if it's all 4, out of 10 times you find it, 9 times you'll be able to make money out of it. Okay. For extension, is it Fib retracement tool and highlight? Yep, that's right, Harena. For Fibonacci extension, you highlight 2 points and you use 127.2 and 161.8. Guys, I have met a lot of very profitable traders who've made a lot of money, like millions from trading, and their main tool for finding those amazing trades is Fibonacci confluence. So please practice Fibonacci complements. I really do recommend it. Once you master this, you can combine it with other things like support resistance, indicators, trend line, channels. But you first need to master this. This is one good thing to master. And then you combine it with other things, and then now you have like a super powerful trade. Okay, guys, I'm gonna have to end this before I get cut off. Thanks for attending. I will see you guys on Thursday. Yeah, I'll see you guys on Thursday, and then next week we're gonna do trading psychology. I'm super excited for trading psychology. You guys are gonna learn a lot for that one. I can vouch for the webinar. So thank you guys. Thanks Rody. Thanks Rich. Thanks Serena. Thanks Lily. Thanks Kaylee, Lorenzo, Pauline, Phillips, Rody. I already said that. Yubaraj, Tammy, Jacob, Gunjab, George, Christopher, Amina, Joseph. There's so many of you. This list keeps going. Zach, Yo. Okay, I will see you guys on Thursday. Okay, thank you guys for attending. Bye.